Thursday, December 28th, 2017, Monaco 64, home of alternative economics and contrarian views. 9:30 a.m. London. I'm going to look at the markets, what they're doing. I want to look at the Bitcoin technical picture and the dollar index. So markets, spot gold, $12.9270, up $5.75. The range has been $12.9350 to $12.8660. Excuse me. So gold and silver continue to trade higher, which is very unusual for these the last week or even more. We have seen very little correction to the downside. Spot silver set 1679, up 11 or 2/3%, which is a good sign. Silver is outperforming gold. The Dow is up 35 or 0.14% at 24,800. S&P up 3 points, 2683. The Nasdaq up almost 1/3% or 20 points. Nasdaq futures 64.45. Currency-wise, we're seeing the dollar lose ground today. Dollar index is down about 1/3% at 92.69. What are the separate currencies doing? Well, the pound is up 47 pips or 1/3% at 134.46. Euro fast approaching 120. Well, it's 119.33. The high's been 119.47. That's up 0.4%, and the dollar is down 0.5% against the yen at 112.8250. What else here? Crude oil almost approaching 60 here. The high's been 59.90. The WTI crude. So pretty strong commodities so far. I want to look at Bitcoin, the Bitcoin chart, because since we almost touched 20,000 earlier this month, we had a big correction down to a 10,000 handle, and lately it looked like Bitcoin was gonna get back towards the high. I think it was a couple of days ago or yesterday we went above 16,000, and today we're back down. As I speak here, Bitcoin is at 14,400. The low's been 13,760. Is down about 6.5% according to World Coin Index. Had looked at this chart a few days ago, but I wanted to wait to see if it confirmed what I thought, and it kind of has. This is a daily chart here, and it looks like we're forming a pretty big head and shoulder formation, with the all-time high there being, the head part, and you can see the left-hand shoulder up there. And now it looks like we're building the right-hand shoulder, and we're coming back down. And the moving average, the blue moving average, is moving back below the lower moving average. That's not a good sign either. And head and shoulders like this could be quite negative. The neckline, I think we can consider the neckline broken really if we break 13,000 and 12,000 as well. So is this mean that the blockchain revolution, the tokenization of the economy is over? I don't think so. But people need to understand, when you have such a big correction like we did from just around 20,000 to down to almost 10,000, it takes time for markets to recover from that. I think in 1987 you saw the Dow drop 22 points in one day. That was October, but a few months later the market had recovered and made a new all-time high. So it does take a bit of time. Maybe it won't take as long as with Bitcoin. We've seen Bitcoin do things that are quite unusual for considering the mature markets. Long-term chart, a weekly chart here. I've drawn a couple of trend lines, as you can see. One is not as sloping as the other. using different bottoms, and the steeper trend line, you can see that right now if we were to drop and break that neckline, we could go down to 8,000. And that corresponds to one of the, I think, is it Mike Novogratz? He's a hedge fund manager. He's big into Bitcoin. He was looking for 8,000. He said Bitcoin could go to 8,000. I wonder if he's looking at this trend line. The other trend line is not as steep. Even if we break below that, if we go to that trend line, the trend is still up for Bitcoin. And we'd get near that, longer term moving average, the beige line there. So that would be somewhere around 5.5, 6,000 in Bitcoin. That would feel pretty horrible, of course, for people who bought quite a bit near 20,000. But that's what markets do. Bull markets, there's an old saying that it's called a bull because it tries to keep you off the bull. Dollar index. Let's have a look at the dollar index because that's also developing a little head and shoulder formation there. The neckline is coming around 92.40, I would say. So looks like the dollar correction higher is over, in my opinion. And I just wanted to talk quickly about one article actually that I saw yesterday in Zero Hedge, and I read it. You have to take my word for it. I had to read it a couple of times. But the gist of it is that the Trump tax reform is going to help U.S. corporations because they're going to supposedly, theoretically bring a lot of foreign dollar earnings from abroad into the U.S. But what that's doing already, and people have noticed, is that the funding for dollars for foreign banks, for European banks and Japanese institutions, insurance companies, pension funds, the funding for them has gone up quite a bit because there's the expectation that there won't be as many dollars out there. And what that's done, because usually these funds in Japan and Europe, they buy a lot of treasuries and they fund it by borrowing in the overnight or LIBOR market for dollars. And up until recently, that made sense because they'd get their returns on their treasury and the funding was less than the treasury yield. But now with the funding going up, I think it's above 2%, only, even the 10-year now is getting to a point where these foreign institutions are not making money by funding their dollar positions. So what this article says, it says, in an unexpected outcome, Trump tax reform blew up the treasury market. I think he's being a little bit, this person's being a little bit, Tyler Durden from Zero Hedge, it's being a bit kind of clickbaity because it hasn't happened yet, but we have noticed that U.S. Treasury yields have gone up. And what this basically means is that unless U.S. Treasury yields go up, these foreign institutions who are the bulk of buyers of treasuries and funding the U.S. government, they're going to have higher treasury yields, which means lower bond prices in the U.S., and which could actually mean more difficulty trying to finance the U.S. budget deficit, which is ironic. This article from Zero Hedge about the Trump tax reform just shows that how politicians in general, when they do something, their objective, is to get the economy going, get money back into the U.S., but they don't think of the unintended consequences. They don't realize, they're so arrogant, especially the American politicians, that they don't realize that it's because of foreigners that the U.S. government can keep racking up huge budget deficits, huge national debt. because they're financed, you know, the Japanese life insurers, the European life insurers, the pension funds, they are the ones buying U.S. Treasuries, the bulk of it. And now with the Fed also not participating, this could be a real like spanner in the works. We need to keep an eye then on U.S. Treasury market, on the yields, see if they continue rising into next year. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on steemit.com and on Twitter, and I'll talk to you later. Bye.